What's up, guys? It's your boy CJ here, and I'm excited to talk to you about today. What is Forex? How beginners can get started day trading Forex in 2021. Let's get it, guys. But before we get started, if you're new to the channel, be sure to hit that subscribe button and that bell for notification for more great videos on Forex, because you don't want to miss a thing. Alright guys, I'm excited to talk to you today because we're going to go over some general information to get you started if you're a complete beginner. I am going to use a PDF that I read when I first started, and it would help you out a whole lot more if I broke it down to you, seeing as though I know a little bit more about, Forex and candlestick patterns and things like that. So this is going to be a read along and somewhat of an example. I will show you on live charts of what everything means, and this is pretty much for beginners. So if you have common knowledge of candlesticks and price action and all that, then this probably isn't the video for you. But if you're a complete beginner, grab a seat, grab your pen and paper, get ready to take notes. This is going to be exciting information because this is very important in what you need to know to begin trading Forex in 2021. Let's get it, y'all. The Candlestick Trading Bible, invented by Musa Hama, the most successful trader in history. Now, I'm not going to go over the table of contents or anything like that. We're going to step straight forward to the first two topics that we're going to cover today. If you want to go over the table of contents, or if you'd like a copy of this, be sure to click the link in the description below to get your free copy of this PDF. My gift to you. Okay, so the first topic that we're going to talk about is, what is a candlestick? The Japanese candlestick formed uses the open, high, low, and close of the choice time frame. You have the upper shadow, the high, the close, the real body of the candle, the open, where the candlestick begins to open at, wherever it opens in the time frame in the market, the low, and the lower shadow, and vice versa if this was a bearish candle. And we'll explain that further in a minute. If the close above the open, we can say that this candlestick is bullish, which means that the market is rising in the period of time frame. Bearish candlesticks are always displayed as white candlesticks. Most trading platforms uses white colors to refer the bullish candlestick, but this color does not matter. You can use whatever color you want. The important is the open price and the close price. If the close price is below the open, we can say that this candlestick is bearish, which indicates that the market is failing in the season. Bearish candles are always displayed as black candlesticks, but this is not a rule. So let's go back up here and look again. We have the upper shadow, the high, the close after the open of the candlestick. We have the real body, and then we have the close, where the candlestick closed. And we have the lower shadow, the lowest point where the candlestick reached. And for a bearish candle, it would be vice versa. You have the open that would be at the top of the candle, the high in the upper shadow. And you'd have the close at the bottom of the candle, the low and the lower shadow. Okay, let's give you a real example of this in TradingView. So TradingView is a platform that you're going to use very, very often. This is where you're going to spend most of your time analyzing the markets, getting used to the charts, and understanding the movements and how they function. So as you see right here, we have a green bullish candle indicating that the market is going up. And we also have a red bearish candle indicating that the market is now going in a downwards direction. And so we have the open of the candle, we have the close, we have the high shadow, and we have the low shadow, the lowest point where the candlestick reached. These are also considered wicks. And you'll learn about wicks later when you start learning about price action. Right now, we're simply breaking down what are candlesticks and how they form and the various time frames in the market. Like right now I'm on the 3-hour time frame, but if I go to the monthly time frame, you'll see a much clearer, bigger picture. And as you see here, for the past 1, 2, 3, 4 months, the market has been rising in a upward direction, bullish. So this would be a bullish market here. As you see, as we go further along in the market, this is a bullish market. It has indeed been going up. Let's find another pair and show you what the market going down is. Okay, here, for example, now I am on the monthly time frame, and for these several months here, you can see the market has been going down in a bearish direction, which means that the market is failing. It can no longer make any higher highs, and it fell to a lower point. Well, I hope you guys enjoyed that bit of information. It was, that's just some basic general information on what candlesticks are, what a bullish candlestick looks like, and what a bearish candlestick looks like. Be sure to stay tuned. Look at the link in the description. Be tuned and ready for the next video coming up. The next thing that we're going to talk about and study are the candlestick shadows, the tails and the wicks, and what they mean. And we'll give you another live example in the charts, how it works and what it means, breaking down the Candlestick Trading Bible. I'm CJ, and I'm out.